Aloha, everyone. Thank you for joining me again for Java. This is for Tuesday, November 7th, 2023. I want to start right off with the markets. We've got our favorite risk indicator, the MMRI, to start with. It's going back above that 300 level. Right now, still at the 302.7, so it's just kind of slow moving. But the elements of that is we can see the 10-year yield is well below the 5 mark, 5%. It's at 4.603 currently, but it is rising slowly. What happened was the relative strength of the dollar really took a hit between what's going on with all of the currencies and a few other things. So the dollar relative strength is coming back up, it's recovering a bit, and that is going to create some headwinds for the equities or the stock market. So at the moment, they're green. We've got gold is below the 2000 level, and oil also took a bit of a hit. So I do expect gold and oil, specifically oil, to have a little bit of a recovery today in the short term because of the supply constraints. So they have committed to staying Saudi and Russia with keeping their cuts so that supply stays low. The futures are telling us that it's not a very positive trend that we're heading towards. And the current sentiment right now is kind of a chop with a negative bias. So correction kind of more is the theme of today. A really good day should be a really good day with the volatility for day traders. If you can just kind of watch your levels and trade your ranges. In the calendar, the reason I say this, we don't really have a lot of information coming out, numbers, not a lot of big things to expect. We do have Federal Reserve Governor Waller speaking today at 10, and consumer credit coming out at 3 o'clock this afternoon. Now, consumer credit, we know it's been terrible and it's kind of going downhill in a rapid fashion. So it only matters whether they say it's a surprise or not and how much. So moving into what's going on, we do have another kind of talking about the debt ceiling again. So they're talking about a stopgap bill that will avert a shutdown of the United States government again. I think they better do that because otherwise there could be a step into the credit agencies. Again, they've already threatened on this political instability to downgrade US credit. If that happens, that could definitely be some headwinds for equities. So we also had UBS, the bank, posting its first quarterly loss in almost 6 years because of the whole Credit Suisse thing going on. So, as this says, it appears that we have a major problem with the banks. So, not just this alone, but also with the quote unquote glitch that happened over the Fed now. They are saying that it was a hacker thing or a glitch or whatever excuse they want to give, but the major banks are still holding some deposits, which is never a good thing. So just understand this is like a small harbinger. When you deposit your money in a bank, it becomes theirs and they can do with it whatever they like. And that doesn't mean that you can get it back whenever you need. So urging caution on these big banks. We've been talking about this. So we also did bring up yesterday WeWork that they were going to file for bankruptcy, and it appears they did file, I believe it was late last night. So we've got a couple other stories on the kind of to go with the labor market. There's a US accounting giant, major company, to lay off more of its workforce. And then along with this accounting company, we've also got numbers coming out. Panera, who's also a major kind of a chain for fast food, is laying off more than 300 corporate ID employees ahead of their IPO. So trying to cut to get their numbers down so that their initial public offering can be better. We'll see how that works for them. We've got also in other news, Intel. They were talking about opening another chip expansion for their company in Vietnam. And apparently that is not going to go through. So we'll watch. This is going to affect not just Intel, but we'll look for some sympathy plays in the other chip sectors, possibly AMD, although they're much larger, as well as NVIDIA. But we'll watch some of the other chip sector that could take a hit because of this. So talking about property, housing, real estate, we've got Seattle coming up with this brilliant idea that they're going to triple the property taxes in order to ease their crisis of homelessness. So they're talking about tripling in one of the most expensive housing markets in the United States, so they can build affordable units of housing and support low income renters. So, in the long run, this could be a good idea, but with the taxes, it's going to price more people out, put more of a crush on this, and taxes never go back down. So, it's not a temporary thing. This is going to drive people out of Seattle. So, housing market starting to crack. Sellers are cutting prices at record levels. So, starting to hit the real estate industry. So, now for the lava updates, I've got a couple of things that I want to bring up to you. Hopefully, this won't get me kind of pulled off. We'll see if this video is allowed to run. So, I've kind of been speaking with a couple of you regarding the Deagle Corporation. This is a link to what there currently is, has since kind of been modified or changed. So, for those of you that do not know, I'll go over a little bit of the framework of it. The Deagle Corporation is a minor branch of the U.S. military intelligence, one of the many organizations which collects data for the high-level decision-making purposes, and they prepare confidential briefing documents for the agencies, for the three letters and up, like NSA, United Nations, also the World Bank. So they came into focus in 2014 because they came up with a list of population reduction predictions. And this was not just for the United States, but it was worldwide, global. And as of March 2022, Deagle is now still publishing articles about military technology, but the predictions for the reduced populations have been removed. So I was able to pull, actually, this one was for the United States of America. So you can see it as an example, they have like all kinds of data sets in here, talking about like between the world at the year, they're talking about GDP, things like their budget, military budget, imports and exports. So the section they're talking about that has since been removed is the forecast for, and this was specific for the year 2025. So if you actually go to that link now, it is missing this section in the countries, the population, talking about the drop that will occur. It's significant and it's kind of crazy. So what they're talking about, the majority of the economic and demographic data that was used in making these forecasts, they use widely available information that comes out from institutions such as the CIA, the IMF, UN, USG, etc. So you can see the most relevant data at every single country's page before on this. And also with these population reductions, this does not include the scenario of either a pandemic or a nuclear war. So these are just kind of the pressures that they are expecting. So now when you go to them, it's just normal country information. So historically, a few points. It's well known that former Soviet Union was making fake statistics years before its collapse. So now the West, as well as other countries surrounding it, are now making up their numbers. We all know this. They cook the books all the time to kind of conceal what's really going on. And that's actually a good reason why I'm here, is to kind of bring to light what the reality is and what the real state of affairs is for our economy. So, the collapse of the Western financial system will wipe out the standard of living of its population while ending Ponzi schemes such as the stock exchange and pension funds. So, Pension funds in the debt market are so incredibly large, they completely dwarf the stock market. And people don't realize this. And the fallout from this is that the population will be hit so badly by so many different bubbles and schemes that migration will actually start to work in reverse, is one of their one of their models. And so this will cause ripple effects and it will lead to the population collapse of the United States. So I want to know what your thoughts are on this. If you'd like to check out that link, I'm going to try to put it in the description as well. If not, this is it. You can pause this if you would like, so you can type it in manually if you need to. And then just give me your take on that if you would. So, a couple of other things I want to go into that might kind of put into this. The current administration is looking to crack down on private Medicare health plans. Basically, they don't want healthcare privatized at all. They lose control that way. There is speech about death panels, basically, when it comes down to cost. And if it's something that would extend the life of someone that doesn't have what they consider quality of living, they could cut that. We've also got, of course, war. Israel is now able to take out targets that are beyond the Earth's atmosphere. And this is kind of, geared towards high altitude weapons, but could be other things as well. And then also we had the EU Commission President Ursula von der Leyen telling Israel that they will have to leave Gaza eventually to make space for a Palestinian state. So this isn't helping things either. There's just so much tension and war there, people taking sides. And the point of this is to divide. So more division is more control for these upper echelon entities that are all Davos, not even government necessarily, but the real one. So with that, I wish you a wonderful day. Green trading day of you traders. And until I see you again, my friends, stay free.